So are you guys ready?
Yeah.
Okay. All right. So let me get the 5 seconds of silence here and away. Welcome. You're listening to the best of investing on Talk 910. This is the show where we present valuable information about real estate, the financial markets, and other economic business of the day. And for those of you listening for the first time, because we have a lot of new listeners, here's our format. A few guys sitting around a bar having drinks without the drinks, talking business with you, the audience listening in. I'm your host, Edward Brown, and I'm pleased to have as my co-host Mark Hunt of Pacific Private Money, the California's fastest growing private lender, and Robert Spinoza of RPM Mortgage. Our phone number is 888-912-1190. Write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. Now, the vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, which is located 1 hour northeast of San Francisco. The vacations are free. Their only request, a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouseforfun.com. You can reach them at 916-777-5511. And today's trivia theme is various types of doctors. And no, Robert, one of the answers is not proctologist.
Damn.
Okay. All right. Our website is Best of Investing.
I had my finger on that one.
Finger on that one.
Nice.
Okay, I know. I was just saying. Okay, our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. Don't forget, we're also on television, Comcast Channel 26 and AT&T Channel 99 on Saturdays at noon and Sundays at 6 p.m. Today we have a special guest, Stephan Piscano of Listed By. Now, Stephan has been a guest on the show, but it's been a while, so we wanted to catch up with him.
This is his 3rd visit to the Best of Investing,
right?
Isn't it, Stephan?
You guys are probably getting sick of me by now.
We never get sick of you. So, for those people who have never heard of Listed By, go ahead and give them a synopsis of it, and then tell us what's going on.
Perfect, thanks. Yeah, no, first off, pleasure to be back with you guys again. It's always a pleasure, and always have a great time. So, yeah, listedby.com. We went live almost 2 years ago now. It's hard to believe. As the first completely free online real estate marketplace and social network with live bidding auction functionality. So effectively what we did is we combined the marketplace functionality of sites like eBay, tailored it towards real estate assets, and then we added the social network component, which we kind of modeled after LinkedIn and Facebook, so that real estate investors and agents can not just market their properties, but they can also connect with each other and market themselves as professionals as well.
Well, it's interesting, Stephan, that I remember hearing that eBay was very large with regard to selling real estate, but the thing is, you got to pay them a commission, whereas your site is totally free.
Yeah, and that was the big thing for me. I mean, not to bore you guys with the details again, because I know you've heard the story, but just for those who haven't, what gave me the idea to create Listed By was I actually liquidated a few hundred homes myself on eBay from 2008 to 2011. And the eBay was great, obviously, because it gets free traffic with the 90 million uniques a month. But the big problem, like you said, is they're charging an insertion fee on the front end, which is non-refundable if the buyer doesn't pay. And then they're charging a percentage fee on the back end. So because of those fees on both sides, number one, it cuts into your margin, but more importantly than that, they would limit the connectivity between the parties. A lot of times you would have fraudulent bidders and misinformed bidders because they're not fully understanding what it is they're even bidding on. So with Listed By, it's entirely free to post your assets on the site, commercial and residential real estate, even notes, non-performing notes. And we added the social network component for that purpose, that you can not just research the properties, but research the person you're buying it from.
Very interesting.
Yeah. It's more legitimate.
And how do you, so if it's totally free, how do you make money?
Everybody's always thinking there's a catch somewhere.
Yeah.
So we actually thought about charging at one point last year because nobody believes we really are completely free. But yeah, for the user base, we don't make any revenue right now off of our users. All of our revenue comes from corporate advertising.
Okay, similar to like Facebook.
Right.
Yeah, well, yeah, exactly. We looked at the websites like Facebook, like Google, that were really the most valuable sites. And we see, they're not really charging their members anything. They're just giving them what they want. And in turn, it creates a targeted traffic base for real estate-related service providers like a Quicken Loans or Auction.com, which is 2 of our advertisers. And so we can allow our members to have the tools they need to be successful in real estate investing and then make money for our partners at the same time.
And how many members do you have on Listed Buy?
Well, we're up to 300,000 organically, and
Wow.
then we just recently did a acquisition partnership, I suppose you could call it, to add an additional 353,000. So now we're getting out there, man. It's exciting. We're about 650,000 users, and we've actually got one of the strongest. Actually, I suppose now we've got the strongest presence in the real estate sector on social media for LinkedIn. And the amount of traffic that we can generate for the real estate sector is pretty impressive. And so I'm looking forward to 2014 hopefully being a big year for us.
So, Stephan, your website is basically a product where someone who owns real estate can sell it without the use of or need to use a real estate agent. Is that essentially what one of the benefits is to bypass that whole network?
Yeah, great question. Yeah, I mean, it definitely initially, since I'm an investor myself, I mean, I kind of built it from that frame of mind to where if you are savvy enough and you want to have that direct connectivity between buyer and seller, you can definitely do that. And you can kind of put it out there almost as an alternative to the MLS. But what we found shortly after going live is that really, even more so than the investor, the real estate agent can benefit dramatically from this. Because all we've really done here is we've increased connectivity and we've cut out the middleman. So now the buyers are coming directly to the list agent, and they don't have to split their commission with sites like Redfin and others. They can actually double in that transaction, put more money in their pocket, and actually get new clients as well.
Got it. Makes sense. So you're not just going after individuals and enticing them to sell without having to pay a commission. You're really going after, and that's smart, I think, the realtor community, and saying, hey, here's an additional way to expose your product, nationwide to people who are looking to invest. Because as we all know, even living here in California, a lot of people I know invest outside of California.
Mm-hmm. Yeah, well, and that's right. I mean, and I'll tell you, of all those properties I sold on eBay, and funny enough, and most of the properties were in Detroit, I don't think I ever sold one to somebody in Detroit. They were always from California or Texas, or many times the most common place is actually Australia. And so, yeah, if you want to have the world really be a global marketplace or national marketplace, then this is the best way to do it.
Now, how does it happen mechanically?
I was just going to ask you, how's the back end of the transaction?
Yeah, how does it work where a buyer and seller can feel safe and secure in a transaction of that magnitude potentially?
Yeah, I mean, and right now that's one of the key pieces that we're working on. Most of the sites really don't have that infrastructure. Well, no one fully has it built out, but some of the sites that are charging those commissions on the back end will let you start the paperwork process. One of our visions that we're hoping to achieve by the second quarter this year is to actually include that digital signature technology like a DocuSign.
Okay.
You can actually start that process. Now, obviously, at some point, you're going to have to go and notarize your escrow documents. But
Right.
what we'd like to do is get you all the way up to that point, that final signing, which is possible to do with DocuSign now without ever even having to leave your home if you didn't want to. Right now, since we don't charge any fee on the commission on the back side, we don't get involved in the transaction really at all. We basically connect the two parties just like eBay does. You get an email, this seller has accepted your offer and so on, here's his information, and then you would start your typical process from there.
So the handling of the escrow really then is between the parties. Then either the buyer or the seller can then say, well, okay, well then we'll open up escrow at this company. And in some states they use law firms. Other states like California, of course, we have title and escrow companies. So is that typically what happens? The parties are introduced to each other. There's an interest made and a commitment made, and now it's time to go and open escrow and take care of the legal side of it.
Exactly, yeah, just like how basically it becomes a really neat lead generation opportunity, just like on LoopNet, for example, where you would post your property. The buyers can actually, you don't have to do it as an auction. You can do it as either a live bidding auction with reserve or no reserve form. Our most common listing is actually what we call an own it now best offer. You put it at a fixed price. Users can then submit offers through the site. You can accept, counter, or reject those to the site. If you do accept it, then both parties will get the notification, okay, the offer's been accepted. here's the seller's info, here's the buyer's info, and then then they reach out, they do the paperwork, and then they go to title and escrow from there.
So Stephan, Rob Spinoza here with RPM Mortgage. Now I have to ask, because you just brought up that point, that is typically where a lender would be involved with a pre-approval letter to say, hey, this buyer is capable of buying the property. We don't have that here unless I've missed something about that. How do the buyer and seller know that that offer will stand up when they go through this process?
Well, I mean, you never really know.
Right.
I mean, at this point, you're right. I mean, it's not a binding legal offer. It becomes more like an LOI at that point.
Right.
Just like, for example, I just put 27 units that I have in Las Vegas up on LoopNet about a month and a half ago. And I've probably gotten about, 25 emails with verbal inquiries and a few verbal offers on that. And it gets me the leads. Now, I actually had one gentleman submit an official LOI, and then he backed down, turned out not to be. So you're always going to have that risk whether you're listing on MLS or LoopNet or listed by. But what this does is when you add the social network component, it allows you to have more open communication, dialogue, and you can have more back and forth if you want before they actually get to that point, and it brings the parties together. So it's really more about connectivity right now.
Got it. And that's sort of like, correct me if I'm wrong, the eBay, the star rating on eBay. So you know that seller is legitimate or that buyer is legitimate. You can tell based on their history.
Yeah, exactly. Actually, we've got the same exact rating system as eBay does.
I think it's very valuable.
Well, it's kind of like a combination. I'm glad you asked that, actually. No one's ever asked that question here. But yeah, it's kind of a combination between eBay and LinkedIn, where you can give and receive recommendations. Yeah. Any member can give one of their connections or recommendations, just like on LinkedIn, and then you can rate the seller or the buyer on the transaction like eBay. So you've actually got those two data points to be able to see a little more about the person you're dealing with. Plus, you've got a more detailed user profile than you would on eBay, because they can actually upload their bio, photo, even a YouTube video on their profile if they want. So you can really look at who you're dealing with, what their track record's like. Is this an investor? Is it a first-time home buyer? Get an idea of to be able to gauge how strong the offer is from that to some extent.
So, Stephan Piscano from Listed By, how do people get a hold of you, or if they wanted to sign up? As I understand, it doesn't cost anything to sign up.
No, completely free to sign up. They can just go to listedby.com. That's spelled like listed by you, listed by me. So listedby.com. And I'd love, if anyone has any questions about the site, or you'd like to work with us in any capacity, to email me, Stephan with an A, at listedby.com.
Very good. Stephan Piscano, thank you very much for joining us on the phone, and the best of investing.
Thanks, guys.
All right. That was interesting. Okay, we are going to cut to our first commercial break here. Again, the theme is various types of doctors. What kind of doctor specifically deals specifically with blood problems? The first three callers and that's not Dracula. The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. What kind of doctor specifically deals with blood problems? 888-912-1190. Make sure to include your name and your email address. Speak slowly. Spell out your email one letter at a time. When we come back, we're also going to let you know who won our hornblower contest.
Oh, wow.
All right? Don't touch that dial. The best of investing. We'll be right back.
That's interesting. I can't help but think that there might be some opportunities. I'm going to get in touch with them. Curious to see what's on that board.
I haven't been on there for a while.
It's been a while since I've been on.
I know he's been really promoting it. It's been growing, and I didn't get a chance to ask him. I just didn't get a chance to ask him how many listings he's got on there now, but I'm sure it's been growing.
Yeah. Oh, yeah. When you go on there, it'll by state.
Yeah. I would think it's got to heavily favor investors. I mean, people who are willing to move. I mean, it's not going to be Joe first-time home buyer.
I doubt it.
It's investors looking for.
Yeah, because once you get down into the nitty-gritty of actually making it happen, you got to be light on your feet. I mean, you're not,
Yep. That is true. So your email question. Question. And the other email that we had received for you was: is there a way to temporarily lock in a rate and then change my mind?
Temporarily.
We'll have to say that for another time.
Your call.
No, it's your call.
Okay.
And Mark, yours
That's
is?
a great question.
Okay. I thought so.
Yeah, it's a great question.
Yeah, Edward comes up with great questions.
The listeners come up with excellent questions. And let's see here. And then for Mark, the email we received from you is, I listened to your show online and I'm interested in investing, but I don't live in California. Is that a problem?
Nope.
I may have a referral for you. Byron Sausalito property is listed at $1 million, and they we're going to go all cash, but they think it's going to go over that. They may need a loan of about 300 or so. She's in China. I haven't seen their profile yet. He's here. They're married. But if there's a big deal with their disparity of their income and how it's just her on the loan, and I don't know what he told me she's a permanent resident alien, which typically is good, but she doesn't have a 2-year history of filing. So
No problem.
they may end up having to go, and depending on what they do with their contract, it's quick.
Huh. 30% down.
Would go private.
Yeah. Well, I mean, it's going to be a really low LTV, but and it's an investment property.
Okay. 70% LTV, is it?
Well, no, I mean, because the purchase price is going to be over $1 million, and they're only looking for a loan of 300. So
Loan of 300.
Yeah.
For some reason I thought they had 300.
Yeah, no, that's
Yeah.
that's what you would. Yeah.
Nice.
Yeah, that's a good one. Okay. Ready?
Yes.
Away we go. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hahn, president of Pacific Private Money, and Robert Spinoza of RPM Mortgage. When we cut to the first commercial break, we asked this trivia question. What kind of doctor deals specifically with blood problems? And the answer?
That one I don't know.
I don't know that.
It's not Dr. Frankenstein. It
It's
is
not-
a hematologist.
Okay.
Hema? Exactly.
Yeah.
Hematode.
Yeah. Okay, and also, we had a special trivia contest last week
You did.
where the winner was going to receive 2 tickets on the Hornblower, which, get this, imagine yourself aboard a luxury yacht with your closest friends and family. Indulge in deliciously prepared food and scenic San Francisco Bay views. Hornblower Cruises and Events offers 3 types of dining cruises: a free-flowing champagne brunch cruise, fun and lively supper club cruise, and an elegant 4-course dinner cruise. Fun for all ages, and book now at hornblower.com. And I got to tell you, I've actually been on all 3 of these kinds of cruises, and every one of them is awesome.
Really good.
I love it at nighttime because you get the great lights at night,
Yeah.
but in the daytime you have the great views. Definitely check them out, hornblower.com. Okay, so here was the special trivia question. What is the second thing most people will judge about you when meeting you for the first time?
I'm going to take a shot at this and say teeth.
Okay, teeth was the first.
Oh, okay.
Okay, it's your grammar. And
Oh,
hey,
wow.
my grammar is gooder than most. So I thought, and our winner was Greg.
I lost my grammar in a flood.
Yeah.
With her teeth.
Our winner was Greg in San Leandro.
Good for you, Greg.
Okay. Now, Robert, we have an email from a listener. It says,
Okay.
I have an interest-only loan now, and I hear that these loans are going away.
Yeah.
What do you suggest I do, if anything?
Great question. Well, interest-only loans are it's partially true. They're not going away with every institution. There are some lenders we believe are going to maintain that in their product line. The problem with interest-only is it's considered a toxic feature by the Dodd-Frank bill, and the Consumer Financial Protection Bureau will not allow lenders to make those types of loans and have them be qualified mortgages or QMs. So if you have an interest-only loan now, and you're in a situation where you'd like to keep the interest-only payment, perhaps it's an adjustable rate mortgage or it's a hybrid. In other words, it's adjustable or fixed for a certain period of time and then will become adjustable. If you're in that situation now and you'd like to keep that feature and you've been maintaining the status of your payments, obviously you're current, you need to work with a lender who will offer those programs. They do exist. They're out there. You've got to be selective. You've got to find a lender. We do make those here at RPM, and yeah, I mean it's the kind of thing where it's just going to get more and more limited and restricted. And so if you need that feature, you've got to seek it out, and you've got to find a lender who can approve you for it and get you into that program again, so you have some more fixed time.
What about loans that are adjustable, and then after 5 years they become fixed?
I don't know about any of this. I don't know
I'd
about it.
throw that out.
Yeah.
Are negative amortization loans, are those like gone?
And that's also a toxic. Yeah, that's also a toxic feature. Those, but you know what? here's the deal about NegAm. NegAm has been gone for 5-6 years already.
Yeah.
Interest only, on the other hand, paradoxically, interest only is a loan product that tends to be preferred and used by some of my most savvy clients. So, I have an issue with it in the sense that I think that for somebody else to tell you you can't get what you want and what you can manage is fundamentally wrong. Now, I will say that if you were sold an interest-only loan and didn't understand that the payments could change and would eventually go higher, everybody has a share in that responsibility of not understanding what they should have done, and I don't think it's anyone else's position to dictate it to us. But that's the reality of the situation. If you've got interest-only, you want to keep interest-only, you've got to work with a lender who can find it and offer it to you.
And how do people get a hold of you, that lender?
They can get a hold of me. They can go on the Best of Investing website. My bio is there. My contact info is there. My phone number is 415-367-5959. Happy to help anyone in the state of California with their mortgage needs.
Yeah,
Absolutely.
Just ask you, and even if it's not this question, they can
Yeah.
still just call you up and ask you a mortgage question.
That's
Ask you out.
Okay. Ask you out.
My wife might take issue with
Yeah,
that.
yeah.
Or maybe not.
Yeah. Okay. Now, Mark, the email we received for you is from a listener out of state. It says, I listen to your show online, and I'm interested in investing, but I don't live in California. Is that a problem?
We have a lot of online listeners. I can't tell you how many emails and phone calls I get from area codes outside of California
iHeartRadio.
to
Yeah.
our
Tune
company
in.
and calling me at Pacific Private Money and asking if either asking if we make loans out of state or if they can invest in our mortgage pool fund product if they live out of state. Now, we only make loans in the state of California currently, but we take investor capital from anywhere. In fact, we have the Pacific Private Money Fund is what's called a 506 Reg D fund.
Hike.
506 Reg D. And funds that are created under that SEC exemption are able to take investments from people who live actually anywhere in the world. So we can take foreign money as well as people from outside of California. And so I have a few investors that are on the East Coast that seem to like the idea of investing their capital in a mortgage-backed investment that's secured by California real estate, because California real estate has been very, very reliable and dependable, notwithstanding the correction, which of course we were in a bubble where most markets in the United States were impacted, but by and large.
But here's the important thing, though: nobody has ever lost money with dealing with Mark's company, and he went through that entire bubble.
Yeah.
Very important.
Absolutely. So anyway, the answer is yes. You can invest, and for more information, if you want information about what is a mortgage pool fund and what that product is that is like a mutual fund of real estate secured notes. Our shareholders who invest in the fund, we use that capital to fund loans, short-term loans, to real estate investors in and around the Bay Area. And so for more information on how that works, give us a call at 415-883-2150. That's 415-883-2150. Or go to the website that we just launched specifically for our mortgage pool fund. And that can be found at pacificmoneyfund.com. That's pacificmoneyfund.com.
Or
go to the Best of Investing website. We've got websites all over the place.
Yeah.
We've got 4 or 5 of them.
Easiest way to do it.
Oh yeah, just Google my name and Mark Hanf, and the first 10 entries are all on my various websites, LinkedIn profile, and etc. We're all over
post office picture. No, I'm just kidding.
Mugshot, definitely.
I was going to ask you, Mark, when you have investors from out of the country, are there any requirements on vetting that capital? Do they have to go through any sort of anti-money laundering or anything like that? Because we deal with that a bit in our industry.
Presently, no.
Okay.
We do not. But we do have the accredited investor requirement.
Oh, okay.
Which
Right.
means that the investor, you have to qualify to invest in our mortgage pool fund and most mortgage pool funds. And our particular qualification requirements are that we can only accept accredited investors, and an accredited investor is defined as someone who has a net worth of at least $1 million, not including the equity in your home. So So that's a key point. So $1 million net worth, but not including the equity in your home. The other way to qualify as an accredited investor is if you happen to make a lot of money, maybe your net worth isn't there, but if you make $200,000 or more per year, that's also qualifies. So again, for more information, give us a call and we can chat about it.
Very good. Okay, hey guys, we're going to cut to another quick commercial break here. Again, the theme is various types of doctors. What kind of doctor specializes in treatment of cancer? The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. What kind of doctor specializes in treatment of cancer? Again, one more time, call 888-912-1190. Make sure to include your name and your email address. Speak slowly. Spell out your email 1 letter at a time. Don't touch that dial. The Best of Investing will be right back. But before we cut out, next week we're going to have another special trivia contest where the winner is going to get a 2-night stay at, get this, the beautiful Hyatt Palm Springs. Centered in the heart of downtown Palm Springs, the Hyatt Palm Springs sits at the crossroads of one of the most memorable vacation destinations in Southern California. The hotel offers stunning views of the San Jacinto Mountains and is footsteps to hiking trails. Hyatt Palm Springs features 197 spacious suites, VIP suites, and poolside cabana suites. Get that. And it offers more than 12,000 square feet of indoor-outdoor meeting space and is the only hotel with an outside cafe with entertainment in downtown Palm Springs. They also have a complimentary shuttle to and from the airport and throughout downtown, including the convention center. And for more information, visit them at www.hyattpalmsprings.com or call the hotel directly at 760-322-9000. So that's going to be next week. We're going to have a special trivia contest for that.
So be sure to listen.
Be sure to listen for next week. Okay, don't touch that dial. The Best of Investing is coming right back.
Looking at this pad from Fidelity National Title. It's supposed to be Ukiah and Willits, and it says Willitis.
Oh, no, does
It's been spelled. Look at the bottom. Willits.
Ah!
It's an extra I.
That's funny. Ubers.
It's funny.
They probably got those for free.
Yeah, right.
Sorry, can't charge for this.
You'd be surprised how many things go to press with obvious errors like
That's
that
right.
because you don't look at the big print. You check all the fun.
It's funny. Vern sent me this one. Did you guys see the BCS title
Oh
game?
God, that was great.
It was a good game
Yeah.
between Auburn and Florida State.
Oh, I heard Florida State won in like the last second. Right?
Yeah,
Yeah.
basically they won by 3 points. So for whatever reason, the T-shirt, it's a picture of a T-shirt, and it's switched up. Who won?
Oh,
Oh,
like the Dewey, wins the paper.
Yeah.
that's right. Dewey wins. True.
Okay, what do you guys want to cover?
I don't really have anything that compelling, to be honest, but we could probably make something out of it. So,
Let's talk about Doo Doo Frank.
Yeah, yeah.
yeah,
I could do a song and dance.
yeah, we can talk about that.
Duty. No, that's the proctologist, the Duty Frank.
That's right. Doo Doo
Yeah, so like I was saying, this transaction comes across, so you have a very small loan amount and a very high purchase price, relatively speaking, and you risk running afoul of the 3% rule. And it's just the most baffling thing how this kind of stuff.
Is he going to get hit with that too, though, for this?
I don't know how that.
No, I don't think so. No, I don't.
Yeah, there's a provision in there. We were talking about that today, where it's
In high cost, you have different things you have to follow through on. It's really more of a. Again, this is investment property, so actually
Yeah, it's that's the part of it.
Except nothing. That's perfect for private loan. I have no restrictions. It's exempt from all those.
See, you should talk about that.
covered loan
Bring that
laws.
on here.
Yeah.
Okay. All right, ready? Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hahn, president of Pacific Private Money, and Robert Spinoza of RPM Mortgage. When we cut to the second commercial break, we asked this trivia question. what kind of doctor specializes in treatment of cancer? And Robert, do you know the answer to that?
I do know the answer to this one. Oncologist.
Oncologist. That
Did
is
you just look that up on Google?
No, I don't.
No, he's
He's got
on.
his little pad computer.
No, but he knew it the whole time.
Yeah, I knew it.
Okay, so Robert, you wanted to bring up, both you guys wanted to bring up the latest rules that are coming down.
Well, here we are. We're right on the cusp of the implementation of the Dodd-Frank Wall Street Reform and Consumer Protection Act. January 10th, most of the provisions go into effect, and I expect it's going to have a quite dramatic impact on the mortgage lending industry. So, yeah, it is something that I think makes for good conversation on a show like this, because there's probably a lot of listeners out there thinking that, hey, what's going to happen with real estate in 2014? What'll happen with home values? And I think a link in this chain is certainly access to credit, mortgage credit in particular. And Dodd-Frank has got the mortgage industry in its crosshairs. So it's going to be very interesting to see how it plays out.
So, Robert, what you're talking about, of course, is what's been known as the qualified mortgage, or QM.
Right.
So the QM rules, the qualified mortgage rules, went into effect on Friday, and it's already, creating shockwaves through the industry. And it's, of course, as you shared between commercial breaks there, that you had to listen in with your RPM Mortgage Associates on a webinar, and it was like faces dropping, jaws dropping. Are you kidding me's and other expletives that were probably uttered during it?
Well, the takeaway on the whole thing is this. Look, we've been in an environment that has been, we all lived through the 2007-2008 downturn. And many of us recall very vividly how in a short period of time we were getting notices from the investors we work with restricting their program guidelines, taking away programs. This is gone, that's gone, this lender's out of business. And here, after 5 years of rebuilding this whole thing, working with the most highly qualified borrowers out there, doing your best to assure that people get the service and product they need. Now here we are in 2014, and we're getting this eerie sense that this is happening again. Lenders restricting what they were offering last year. I mean, we haven't seen that happen now for some time. We've been making loans of incredible quality, and we're scratching our heads saying, why are they doing this now? And how indiscriminately it's being applied to people who have the resources, the ability, and the desire to take these loans seem to be the ones that will be most impacted by it.
So we had this crisis in the fourth quarter of 2008, over 5 years ago.
Right.
And 5 years later, here we are to
Here
save
comes
the
the
day.
cavalry.
Yeah, right. So the free market has generally, right, and generally the free market and capitalism, for all its flaws, corrected the
How about
problem and
Fannie and Freddie turning a
self-corrected
profit.
the
I mean,
problem.
yeah, it just, and so what we're really getting at specifically is you take a look at, Mark mentioned qualified mortgage. We've talked about this a little bit before. There are certain loans, and we covered this in an earlier segment, that will not be qualified. They do not meet the definition. Those are loans that have amortization terms longer than 30 years. They have toxic features such as interest only or negative amortization. And when you have these types of loans, you no longer have a qualified mortgage. Now, if you do have a qualified mortgage, there is another gradation of QM, and that becomes higher price mortgage loan or not higher price mortgage loan. And as you go down this flow chart, when you're a consumer, your options are governed by how you fit into these boxes. And it may be through none of your own doing, you may run afoul of these guidelines where you thought otherwise you had a perfectly qualifiable and approvable loan.
Does this have anything to do with James Bond? Because you're mentioning these initials Q and M.
Q and M. I'll throw another one out there. ATR. It's ability to repay, and that is a provision by which we must measure all sorts of loans, and it gets banks into trouble because if a borrower comes to us and says that they have, for example, a certain debt that they pay for their son or daughter, but it's not on their credit report, now the lender's in a very sticky situation where he may say, hey, look, this was revealed to me by the borrower. It's not on a tax return, it's not on a bank statement, but now does this impact the borrower's ability to repay that loan? It puts the lender in a very difficult situation. And the irony of it is that what the lender fears is that that very same person they help will later come back with a foreclosure defense and say, my lender knew something about that and they gave me the loan I wanted and I foreclosed on it, therefore the lender is liable.
Yeah,
it's perverse. It defies logic in my mind.
Well, of course, the government has tried to sell this to the consumer, to the public, as being, hey, I know it took a while, but finally we're enacting the appropriate provisions
Right.
to protect you from
Yourself.
Well, no, actually to protect you from the banks, to protect you from predatory lenders, and protect you from
Right.
unscrupulous mortgage brokers. And so they're painting it as this is, finally after 5 years, it took a while, but we perfected it, and now it's going into place, and isn't this great?
Right.
And from my perspective, my personal opinion is that it's completely unnecessary. It's way too late
Right.
to the ball game. It's fixing problems that no longer exist, and
Good.
it's going
Well
to
said.
hammer the real estate market. Any hope for a robust recovery in real estate, I think, is significantly hampered by the fact that the public is going to discover in 2014 as they go to buy a home that they don't qualify for the type of bank loan that they've grown to expect to be normal.
We are really doing our best at RPM to ensure not only that we're compliant with the Dodd-Frank regulations, but that we understand them such that we can turn around and make sure that our consumers are insulated from the worst part of it. Because really, where we see this hurting the most, is in the lower loan amounts. Because when you have a lower loan amount, oftentimes here in California, for example, your title charges, your escrow charges, the lender fees that lenders customarily charge are somewhat relative, or they're somewhat consistent across the board. In other words, yeah, they're fixed, somewhat fixed, and they don't scale the same way. So you run the risk, and this has been discussed in the conversation about Dodd-Frank, about disparate impact, meaning that those at the lower end of the loan amount spectrum could be adversely impacted because of these things, and that will prevent them from gaining access. Yet, that runs afoul of a lender's, what would you call it? A lender's really need to demonstrate that it serves all segments of the community.
Well, and you gave a great example, Robert, earlier. You say, let's say it's in the Bay Area, you're buying $1 million home. If you're borrowing $700,000 or $800,000,
Right.
and you've got the income to qualify, you can pretty easily get that. It's a jumbo loan, of course.
Right.
But with the fee structure that you would normally charge, as long as the person has the income and the ability to repay, you can close that. But what if that same borrower now wants a $300,000 loan
Right.
on $1 million acquisition? Well, but some of the title and escrow charges are related to the $1 million acquisition.
Correct.
And yet the brilliant politicians decided that they were going to include all fees in terms of doing the calculation for what a quote high cost mortgage
Right.
is. And so now, relatively speaking, as you said, some of these fees are fixed or semi-variable. There are minimum fees involved. So for a $300,000 loan, all of a sudden that borrower may not qualify for a good loan program, and that just defies
Wait,
logic.
isn't the title company insuring the $300,000 loan?
On a purchase, they are doing both. They are insuring, the lender is being insured for the amount of the loan, but the owner is being insured for the purchase price.
Yep.
So you have two policies on. Now, the other thing that Mark touched on too, and I want to bring this up because it also demonstrates how these bills sort of, they collide.
Do you want to bring it up now or right
Yeah,
after?
let's bring it up after the break.
Right after the break.
Sure.
Okay, we're going to cut to a quick commercial break here. Again, the theme is various types of doctors. No proctologist in this one, and no ear, nose, and throat, which would be an otolaryngologist. I had a friend who was like that. Yeah, you like that? Pretty good.
How long does it take to get that degree?
Well, I don't know. My 6 years of high school qualified
Takes
me
a real long time to
to
say it,
go
so
finally to college. So, okay. Here is our third trivia question. What kind of doctor deals with diagnosis and treatment of heart disease? That's the easiest one, I think, of all these. Okay, the first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 912-1190. That's 888-912-1190 to answer this question. What kind of doctor deals with the diagnosis and treatment of heart disease? Make sure to include your name and your email address. Speak slowly. Spell out your email one letter at a time. Don't touch that dial. The best of investing will come right back. Robert Spinoza has some good stuff and will have some closing comments.
So if you have what I was going to talk about is if you have let's say you have a jumbo loan and it is, now a jumbo loan is, well, we can talk about two things. Fannie and Freddie, you probably know this. Fannie and Freddie, you do not need to stick to 43%.
Right.
So Fannie and Freddie have a 7-year exemption where as long as you get an approved or an eligible from Fannie or Freddie, you can do the loan at a 48% DTI, for example. However, if it were a jumbo loan, it's 43%. So you tell me what's the higher risk, a borrower who goes to get a jumbo loan with a 43% debt ratio and 80% loan to value, or a 44% DTI with a 25% loan to value.
Yeah.
One gets a loan, one doesn't. I mean, that's crazy.
Short segment. 2 minutes and 5 seconds.
Yeah, we have just enough to say goodbye. No. 6 minutes and 30 seconds.
Cardiologist and
Yeah,
I feel like Saturday Night Live. Thanks for coming.
All right, here we go. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hahn and Robert Spinoza. When we cut to the third commercial break, we asked this trivia question. What kind of doctor deals with the diagnosis and treatment of heart disease? Anyone?
Cardiologist.
Cardiologist. Like you said, I'm such a card. Okay.
Yes.
We promised the audience that you would come back with some interesting things, Robert.
Well, we're just harping on, not on harp.
Not on
We're-
harp,
We're,
yeah.
we're harping on Dodd-Frank, and a couple of things that have come up, some examples, and this is again, it paints the picture of how just confused this bill really is. If you take, let's look at a jumbo buyer again, for example. If you've got a jumbo buyer and he's going to be held to a 43% debt to income ratio, that was a number that was determined by the creators of this bill to be acceptable. Now, you tell me, Mark, Edward, what is a higher risk loan? A jumbo loan made at 80% loan to value with a 43% debt ratio, i.e., a QM or a equivalent.
It's a qualified mortgage.
Equivalent of a qualified mortgage in this case, or a 44% DTI for whatever reason at a 25% loan to value. I mean, you do private money. You tell me what the bigger risk is.
I choose B.
Right.
No, which is riskier.
Which is riskier?
A is riskier.
Right. Obviously, A is riskier, but A will pass one test, will pass the QM test, but B will not. So you have these things overriding the better judgment, and I know that they're on us about not having exercise judgment, but that is what we have.
As Ricky Ricardo would say, explain this to me, Lucy. I don't understand.
Yeah, it doesn't make much sense, and we're going to have to see if these rules, because the rules have been final and then final again and then final again. So we're going to
We really mean it this time.
We're hoping that the additional final rules will get us back more towards reality.
Yeah, the biggest problem with this is that even though they passed the Dodd-Frank legislation now almost 3 years ago,
Right.
is that the unelected officials out there whose job it is to now enact regulations and legislation, or regulations rather, around the legislation. This is what's causing the problem. Like, for example, 43% is obviously a compromise between two other numbers, because nobody just comes up with 43. Why 43?
Right.
So it's just absolutely
Because
silly.
between 42 and 44.
No empirical data to support the 43, and I go back to what other people have said, where the single biggest cause of the collapse of real estate back in 2007 was the notion that you could continually refinance out of debt that was unaffordable and unsustainable in the first place, and that was propagated by a lot of different institutions all along the way, all throughout the system. It does not relate to a specific characteristic in any loan, and Dodd-Frank has aimed at trying to identify those points. They don't exist.
Before we cut out, during one of the breaks, you had mentioned something about borrowers having to go to an 8-hour class.
Mark was talking about that. Maybe he can help you with that one.
Well, in private money, we generally don't make loans to consumers, but I called my attorney on an application application we got where the consumer had tons of equity in their home, wanted a second, and made gobs of money so they would qualify on the affordability to repay. And he said, well, under the new high cost laws, there were three things, and the first two I could comply with, but the third one was the borrower would be forced to attend an 8-hour course on high cost lending. The borrower, not the lender. So that killed the deal this week. Is the agent who called me said, my client will never do that. Click on
Yeah.
Just go to the class and say, what are they going to learn? That it costs a lot? That's why it's called a high cost
So how is
loan?
that good for the consumer?
Well, right. I have to go to a class to get the loan I want and understand. It's incredible. Well, you know what? We try and end on this note too. Look, if you're out there, if you're in the mortgage world, if you're looking to get a loan, talk with people who know about it. Get informed.
Absolutely.
Yeah, and get yourself on the right track. Be aware these things are going to be with us to stay for a bit, and we all have to navigate this water. And there are some of us that are committed to doing that and ensuring a good outcome. And that's the way we've operated all along. So reach out, and we're happy to help.
Yep, the options are fewer than they were, but they're not. They still exist.
We got some, and we'll work with what we have, and we know how to do that because we can do that.
You call Robert Spinoza first at what number?
415-367-5955.
And if for whatever reason you can't provide you a conventional loan, you call Mark Humph at what number?
415-883-2150.
All right, so we have some thoughts for today,
Great.
gentlemen.
We always do.
That's right.
They're always good.
You're always good. You're like, okay. Did you ever notice that bills travel through the mail twice the speed of checks? I noticed that quite
I
a
have
bit.
noticed that.
Okay, and did you know that worrying works? 90% of the things I worry about never happen. That means I worry quite a bit.
Worrying does not take away today's problems; it takes away tomorrow's peace.
That's excellent.
I like that.
Did
I
you
like
just
that.
make that
No,
up?
I didn't make that up.
We'll make something up on the spot.
Yeah.
Because I like that.
Yeah, that's
That's very good. Okay, Mark, any last, you have 20 seconds. Anything you want to tell the audience here?
We love our borrower clients at Pacific Private Money. So if you're a real estate investor looking to buy real estate in this market and the banks are befuddling you, please give us a call or go to our website, pacificprivatemoney.com.
Do not let the banks befuddle you. I
That's
like that
right.
word, befuddle.
We make borrowing easy.
There you go.
Pacific Private Money. That's my
And if you want to invest with Mark, same thing.
Absolutely.
You're paying right now over 8%
Yeah.
secured by real estate. All right. Tune in next week to The Best of Investing. We're going to be giving away, how many? 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long. No Kramer Day.